Okay, so hello everyone, and today's session is regarding the March-June 2025 attempt past papers. Okay, as you all know that after taking all the lectures, we are on the last folder on LMS, and that folder covers all the past papers of last 6-7 years. We have solved all the questions before as well, and now it's time for March-June 2025 question. Okay, let's start. Following scenario relates to four requirements. The first question is following scenario relates to four requirements. There are four requirements. The Eastern Hospital Trust EHT is responsible for running three hospitals in the east of the country of Azuland. These hospitals are called Mid-East, Northeast, and Southeast. Okay, so Eastern Hospital Trust is responsible for running three hospitals. The three hospitals are Mid-East, Northeast, Southeast. EHT's overall objective is that its hospitals should provide top quality medical services which are quick to access and supported by excellent patient care. So objective is that we need to provide top quality medical services which are quick to access, supported by excellent patient care. EHT is funded by the government of Azuland and does not charge patients for the services in hospitals offer, which include patient referral by doctor and emergency treatment. It's a government hospital, right? Because it is funded by government, it does not charge patients for the services its hospitals offer, which include patient referral, emergency treatment. They don't charge anything. In recent years, government expenditure in Azuland has been significantly higher than tax revenues, and the government is trying to reduce public spending. As a result, EH's funding has been reduced. Now, this is what happens with a government hospital, and these problems are unlikely to happen in a private hospital because private hospitals charge money. This EHT has three hospitals, Mid-East, Northeast, Southeast. They want to provide top quality medical services, excellent patient care. They don't charge anything, and they're funded by government. Okay. Government expenditure is higher than tax. So in the recent years, government expenditure is much higher than revenues. Government is unable to collect tax, but expenditure is higher. So government is trying to reduce public spending. It wants to reduce public spending, and EHT's funding has also been reduced. EHT's chief executive has raised concern that these funding cuts could lead to a reduction in number of staff employed at the hospitals, which may affect the quality of care they provide to their patients. So CEO has raised concerns that these cuts could lead to a reduction in number of staff employed at hospitals, and this may affect quality of care. So CEO is worried that funding cuts means we have to outlay some staff, and this affects the quality of care. Following table shows the actual results for the last financial year for three hospitals compared against key performance indicators EHT uses to assess hospitals' performance. Results have been verified by EHT's auditors. So following table shows actual results for the last financial year, okay, for three hospitals. These are actual results for three hospitals compared against key performance indicators EHT uses. So these are compared against key performance indicators. These results have been verified by auditors that they're correct. Okay. So let's see the table. Percentage of emergency patients treated within 4 hours. Okay. Note 1. Let's study note 1. All hospitals in Azuland have a target of treating emergency patients within 4 hours of them arriving at the hospital. So this is a note that all hospitals have target that they should treat emergency patients within 4 hours of arriving at hospital. So percentage of emergency patients treated within 4 hours. Mid-East Hospital has treated 94% patients within 4 hours. Northeast, 89.5% patients treated within 4 hours, and Southeast, 91% patients treated within 4 hours. Okay. Percentage of non-emergency patient appointment schedule within 12 weeks. Okay. Note 2. The target for non-emergency patients is that they should attend their first hospital appointment within 12 weeks of being referred by the doctor. What is the target for non-emergency patients who don't have any emergency? They should attend appointment within first 12 weeks. So note 2, percentage of non-emergency patient appointment scheduled within 12 weeks. Mid-East has 95% patients appointment scheduled within 12 weeks. Northeast 91%, Southeast 92.5%. Okay. Percentage of patients who describe services as excellent, note 3. At the end of their treatment, patients or their relatives, if a patient is unable to respond directly, are asked to assess whether their quality of care has been excellent, very good, good, average, or poor. So at the end of treatment, patients are asked that whether quality of care is excellent, very good, average, or poor. So percentage of patients who describe services is excellent, no three. Medis hospitals, 46% patients only said that the service was excellent. Northeast 56.5% and Southeast 55% patients were excellent. So customers, less number of customers are saying services is excellent. They may be very good, good average poor, but excellent services, only 46% patients here are saying excellent services, here 56.5, here 55.4. Quality rating score, note 4. The quality rating is an assessment made by independent external professionals who observe the quality of a sample of the medical procedures being carried out in hospital. A score of 5 denotes excellent while 1 denotes poor. So quality rating is 5 denotes excellent, 1 denotes poor. See, quality rating score 4.5, 5, 4.9. Okay, so score of 5 denotes excellent, 1 denotes poor. All the scores of quality rating are close to 5. Okay. Average cost per patient. Cost per patient is $16,800, $21,300, $18,100. So cost per patient is varying in each hospital. Overspend compared to budget. How much they've overspent compared to budget? Nidis Hospital has spent 143,000 overspent than budget. Whatever budget government gave them, they spent 143,000 more. Northeast spent 156,000 more, and Southeast spent 531,000 more. It's just this overspending compared to budget, not the spending, overspending compared to budget. Like, looks to me a very good case. Requirements will be interesting. Okay, so let's just summarize the data and then move towards the requirement. The Eastern Hospital Trust is responsible for running 3 hospitals. 3 hospitals are being run: Mid-East, Northeast, Southeast. Okay. Eastern Hospital Trust runs 3 hospitals: Mid-East, Northeast, Southeast. Overall objective is that hospitals should provide top quality medical services, which are quick and excellent patient care. EHT is funded by government, does not charge patients. Okay. Recent years, government expenditure is higher than collection of tax. So government is trying to reduce spending. As a result, EHT's funding has been reduced. CEO has raised concern that if government reduces funding, we have to remove some staff members, which may affect the quality of care. Following table shows actual results compared against key performance indicators. Okay. And the results are verified. So what are the results? The first result of note 1 is that all hospitals must treat emergency patients within 4 hours. Mid-East Hospital treated 94% patients within 4 hours. This 89.5%, this 91%. Non-emergency patients appointments within 12 weeks. The target for non-emergency appointments is that they should attend first appointment within 12 weeks. At Mid-East, 95% appointments within 12 weeks. Northeast, 91%. Southeast, 92.5%. Okay. Percentage of patients who describe services is excellent, no 3. So at the end of every treatment, patients are asked whether the service was good, excellent, poor, average. So 46% patients said excellent, here 56.5% is excellent, here 55%. Quality rating score, 5 excellent, 1 poor. So score was 4.5, 5, 4.9. Cost per patient is 16,800, 21,300, 18,100, and overspending compared to budget. Okay. First requirement, 3 marks, very easy. Define economy, efficiency, and effectiveness in the value of money concept. You need to describe economy, efficiency, effectiveness in value for money context. So value for money means economy, efficiency, effectiveness. Okay. So define economy, efficiency, and effectiveness in a value for money context. Okay, now seems to be a very easy question where you need to describe the economy, efficiency, and effectiveness. 3 easy marks. So what has been taught to you? Economy refers to getting high quality product or service at the lowest possible cost. Economy means lowest cost. Any product service you acquire, they should be at the lowest cost. Okay. Efficiency refers to input output ratio. What is input output ratio? If you don't want to write this, no worries. Refers to input output ratio. That is organization achieving maximum output from lowest or minimum input. Effectiveness refers to ensuring that organizations' objectives are achieved. Okay, 3 straight marks. No need to unnecessarily prolong. I have the examiner answer open in front of me. It has written that economy assesses the extent to which services of acceptable quality are provided at lowest cost. So high quality product service at lowest cost. Efficiency considers that organizations want to maximize benefits and outputs from their minimum input. It is defined as input output ratio, same thing. And effectiveness definition is as it is the same as I wrote by the examiner, describes the extent to which organization achieved its objectives. Okay. So 1 mark per definition. That's it. People try to unnecessarily wrong. Many people might be thinking the effectiveness definition is very small. We should elaborate it. No, that's the same thing as the examiner answer, that organization's objectives are achieved. Okay, please quickly note so I can move forward. Okay, next requirement B. Let's start this. This is worth 4 marks, I think. Explain why it is important that EHT uses a balanced mix of performance measures across the three E's. So why it is important that EHT uses a balanced mix of performance measures across three E's, what it's trying to ask. Why it is important that EHT does not focus on any one E, like it just focuses on economy, just focuses on efficiency, just focuses on effectiveness. Why it is important that EHT uses a balanced mix, focuses on economy, efficiency, and effectiveness. This is exactly the class lecture in which I taught you value for money. That in value for money, you should focus on economy, efficiency, effectiveness. Economy means low cost, efficiency, less input, higher output, effectiveness, ensuring objectives are achieved. Okay. But I told you, you cannot just focus on one area, right? Because if you focus on economy, okay, only low cost, efficiency, effectiveness gets disturbed. If you focus only on effectiveness, ensuring objectives are achieved, you might have to compromise cost, economy. So it is important that you focus on balanced mix. And this is what exactly is some question, that why EHT? Why it is important that EHT uses a balanced mix across three E's, doesn't focus on one E. It is highly important. Ignore these error points. Actually, there has been a new system implemented by ACCA Practice Platform on the official ACCA website, and it has just some bugs which will be fixed. So just ignore these red errors. It is highly important that EHT does not focus on any one E, be it economy or efficiency or effectiveness. It is good to focus on all three E's in a balanced manner because if organization focuses on one E, it may have to sacrifice other E's. Hence, leading to non-achievement of value for money. So I've just given a basic statement at the moment. Why it is important EHT uses a balanced mix. Okay. It is highly important that EHT does not focus on any one E. It is important to focus on all three E's in a balanced manner. Why it is important in a balanced manner? Because YHT focuses on balance mix. Why it is important to focus on all three E's? Because if we focus on one E, it may have to sacrifice other E's. Focusing on one E, sacrificing other E's means you're not achieving value for money. For example, if EHT hospital, relate to the scenario, you can give an example about the scenario in the question, focuses only on economy, that is low cost, it may have to reduce its staff, hence leading to problems in efficiency, and less staff may not be able to handle all patients, leading to fall in patient care service, hence damaging overall objective, that is effectiveness. See, what was the objective of the hospital? Provide top quality medical services which are quick to access and supported by excellent patient care. They want to provide excellent patient care. So if EHT only focuses on economy, low cost. So for low cost, you have to reduce staff. If you have less staff, how can you maximize output? You don't have the input, you don't have the staff, you cannot maximize output. Less staff means your efficiency will be disturbed. And less staff means you cannot handle now all patients in a proper manner. So this will affect your excellent patient care objective, which damages effectiveness. Similarly, if EHT hospital only focuses on effectiveness, that is objective of excellent patient care, then it might have to, excellent patient care and quick service. This is the objective, right? Provide top quality medical services are quick and supported by excellent patient care. So if EHT focuses on effectiveness, objective of effectiveness means objective, excellent patient care, quick service. So for quick service, you have to hire more staff, which will increase cost. Hence damage economy. So it's important to have a balanced stance on all three E's. Okay. Now, trust me, this was a very generalized question. People many times expect that there is something in the book or study hub that we just wrote, learn, and tried to copy paste the answer. This doesn't happen in PM, right? Define economy, efficiency, effectiveness. You wrote the three definitions from the book or study hub. You got 3 marks. Okay, now why it is important that it uses a balanced mix across trees? That means it is asking why it is important that it does not focus on one singly, keeps a balance on all three E's. So it is highly important that we focus on all three E's rather than one E, because if you focus only on one E, it automatically damages the other E's and your overall value for money concept gets disturbed. Obviously, I cannot just write this. I have to explain my point, justify my point that it is important that it focuses on all three E's, not just one E. Because if you focus on one E, other two E's will be damaged and overall VFM won't be achieved. So how is this possible? I gave two examples. If EHT hospital focuses on economy, low cost, really staff, then your effectiveness will be damaged. No quick service, less staff means no quick service, long waiting times, and not excellent patient care. Similarly, if you focus only on objective, you have to have more staff, leading to cost, economic damage. So it is important to focus on all three E's, because focusing on one E definitely damages the other E's. Okay, 7 mark requirement are done. Please copy this. Okay, let's see after this part A1, A2. Sorry, this was not part B. It was A2. What else we have in this question? Okay, part B, 9 marks. Discuss the performance of 3 hospitals using the performance data provided. So we need to discuss the performance of 3 hospitals using data provided. I would have just started discussing performance of all these 3 using data provided, but it's a note. Use the headings economy, efficiency, and effectiveness to structure our answers. So you have to discuss performance of 3 hospitals under the heading of economy. Then you have to discuss performance of 3 hospitals under the head of efficiency. And then you have to discuss performance of 3 hospitals under the heading of 3 marks each. So 2 3 points would work in each head. Now see if this note was not given. If this note was not given. The question would have just said that discuss the performance of 3 hospitals. So I just started and discussing performance of 3 hospitals, that percentage of patients treated within 4 hours were the highest at Mid East. That means it's going very well with respect to its target number 1. And appointment schedule within 12 weeks is also the best for Middle East as compared to target 2 and stuff like that. Quality care is good at all 3 hospitals, but Northeast is the best. I would have just written this. Cost per patient is highest at Northeast, so it needs to control cost. Southeast has spent more than budget too much. It needs to control its expenditure. Okay. Very less number of customers are saying that services are excellent. They should be a cause of concern. I would have written all these points. But my limitation here is that it didn't ask me to discuss the performance of 3 hospitals using data. It specifically said me to use the headings economy, efficiency, effectiveness. That means I need to discuss performance of all these 3 hospitals using economy, efficiency, and effectiveness. Okay. So I will discuss performance of all these 3 hospitals under the head of economy. Now, what do you think? If I want to discuss performance of all these 3 hospitals under the head of economy, what should I look at? So for economy, okay, I have to look at cost. Okay. So these are the figures of cost given. So I think to discuss the performance of these 3 hospitals under economy head, to discuss the performance of these 3 hospitals using economy head, I have to just look at cost because economy is cost related. So to discuss the performance of all these 3 hospitals under economy, I have to look at cost. Okay. So I am discussing the performance of 3 hospitals. If there had been no headings, I would have just randomly written 2 3 paragraphs and that would have been it. But discuss performance using the headings of economy, efficiency, effectiveness for the 3 hospitals. So let me discuss performance of 3 hospitals under the head of economy. Economy relates to cost, so I will only talk about these 2 things in economy. As far as costs are concerned, Southeast Hospital has spent 531,000 more than budget. Northeast has spent 156,000 more than budget. And Mid-East has spent 143,000 more than budget. Although all 3 hospitals have spent more than budget, Southeast can be regarded as least economical as its spending is very high compared to budget, and it must find avenues of cost reduction. Okay. So although for economy, I need to look at cost, discuss the performance of three hospitals. It can be said this is doing good economy, better economy, least economical, because the cost is most higher than budget. So that means it is spending the most. So it's not economical. So I've discussed the performance under the head of economy by looking at this. Okay. There's one more point on economy because although all these three have spent more than budget, so all are damaging economy, but this is the least economical because the spending is 531,000 more than budget. It needs to reduce its cost and avenues of cost reduction. Okay. On economy, you can also talk about the average cost per patient. As far as cost per patient is concerned, Northeast has the highest cost per patient among all three hospitals. So it might be least economical among all three from this particular ratio. Okay. I think there is nothing more to talk about economy here because in economy, you need to discuss performance of all three hospitals using economy. For an economy, I can only talk about costs. Okay. So cost wise, this ratio wise, this seems to be the least economical, and this ratio wise, this seems to be the least economical. And this happens. Like, for example, you have found gross profit margin and net profit margin. A company may be better according to gross profit margin, but on perspective of a net profit margin, the other company may be better. So this happens. All different ratios give different answers. Okay. So from this particular perspective, Southeast least economical. From this perspective, Northeast least economical. Okay. There is no more indicator to talk about economy. Okay. Now I have to discuss the performance of all these three under efficiency and effectiveness. Okay. Now let's discuss performance of all these hospitals under economy. So I talked about cost. We have to discuss the performance of these three under the head of efficiency and effectiveness. Let's start discussing performance of all these three hospitals under the heading of effectiveness. Okay. I'm going to effectiveness first, then I will come back to efficiency. Okay. So let's discuss performance of all these three hospitals under the head of effectiveness. What does effectiveness means? Ensuring objectives are achieved. What was the objective? Top quality medical services, excellent patient care. So this was the objective. Quality services, excellent patient care. Objective was quality services, excellent patient care. So discuss the performance under the head of effectiveness. Objective, quality, excellent patient care. Okay. So what do you think? To discuss the performance and effectiveness, an economy only talked about cost. For effectiveness, what should you talk about? The objective. What was the objective? Quality service, excellent patient care, right? So for effectiveness, I think you should comment on these two: quality and excellent patient care. This was the objective. In effectiveness, we focus on objective. So objective was excellent patient care, quality service. Okay. So to comment on effectiveness, we have to talk about excellent patient care, quality score. I think these are the two objectives, and in effectiveness, you can talk about this. Okay. Objective was to provide quality service and excellent patient care. And I'll discuss the performance of three. It seems that quality rating score of all three hospitals is good because the quality rating score of 5 denotes excellence. So all three hospitals' quality rating score is good and near 5. But Northeast seems to be the most effective in terms of quality care and Mideast seems to be least effective in terms of quality care, right? For effectiveness, it's objective. You can look at these ratios. Okay, for economy, you can look at these ratios. For efficiency, you can look at the ratios. For effectiveness, objective, quality, and excellent services, this was your objective. Okay, so as far as this quality rating score is concerned, Northeast, most quality care effective, least effective. Okay. Percentage of patients who describe services as excellent. Okay, because excellent was also your objective. As far as patient feedback is concerned, again, 56.5% patients at Northeast think services were excellent, and only 46% patients at Mideast think services were excellent. So this indicator also suggests Northeast as most effective and Mideast least effective. If you look at the quality rating score, this has the best score, most effective, most quality, least effective. If you look at the excellent services, only 46% patients are saying it's excellent, 56% patients are saying it's excellent. So Northeast again in more excellent, and this is least. So effectiveness is only related to objective. Objective was excellent patient care, good quality service. So you looked at the quality rating score and excellent services, and you concluded that discuss the performance of three hospitals, which is most effective, which is least effective. And for economy, you should look at cost. By looking at cost, you told them which is most economical, which is least economical. Okay. Now, obviously, we need to discuss the performance of these three under the head of efficiency. So obviously, for efficiency, it's input-output ratio. Maximum output from minimum input. Okay, so you all know that economy, you talked about cost. Efficiency, effectiveness, you talked about the objective. So for efficiency, whether hospital is efficient or not, you can check these two. Whether patients are treated in 4 hours and whether appointments were scheduled in 12 weeks. At Mideast, 94% emergency patients were treated in 4 hours. Suggesting highest efficiency among all, and Northeast seems to be the least efficient here. Similarly, non-emergency appointments within 12 weeks were 95% at Mideast, and only 91% at Northeast, again suggesting that Mideast is most efficient among all three. Now, what I do in discussion of performance, I just interpreted the data. And that's what performance measurement is all about. Just interpret the data. So you were given data and you were asked to discuss performance of three hospitals. I told you, had it not given the requirement of three headings, I would have just randomly discussed the performance. The performance of Mideast is good in terms of treatments within 4 hours. Northeast is bad. This is normal. Non-emergency appointments, again, this performance is good. This is bad. Quality services were excellent at Northeast, and quality rating score Northeast. This is very good. This is least. Cost wise, this is having a very high cost. This is having a very low cost. Okay. But since it asked me that to discuss the performance of three hospitals using data under the headings of economy, efficiency, effectiveness. So I know that to discuss the performance of these three under economy, I have to talk about cost. Discuss the performance in their effectiveness, the objective. I have to talk about the objective, excellent and quality rating score. I commented. And under the heading of efficiency, the remaining two. Okay. And this is what it suggests that efficiency wise, this might be good. They have a good efficiency. Okay. But effectiveness is not there. Okay. Similarly, they have effectiveness. Northeast has effectiveness, objective, but their efficiency is not good. Okay. This hospital has normal efficiency, excellent quality care, good course, but it is incurring a huge cost. Okay, so economy wise, someone else is good. Efficiency wise, someone else is good. Effectiveness wise, someone else is good. This happens in value for money. Okay, that one ratio wise, one company is good, other ratio wise, other is good. Okay, so I hope this 9 mark requirement was clear. Please copy so I can move towards the last part, but it's a very easy performance measurement question. You just have to discuss the performance under economy, efficiency, effectiveness, and you must know that to talk about economy, I can only refer to cost. To talk about effectiveness, I should only refer to quality care and services excellent. Okay, please copy. Okay, let's just wrap it up now with the last part. Discuss two challenges EHT might face when measuring performance of its overall objective. So, two challenges EHT might face when measuring performance of its overall objective. Now, this is a very specific requirement for this question. It's not from the books, and this is what performance measurement is all about. Discuss two challenges EHT might face when measuring performance of its overall objective. What is the overall objective? Provide top quality medical services which are quick to access and supported by excellent patient care. Okay, so the objective is provide top quality medical service and excellent patient care. I'm making it a bit summarized. You have the objective right next to you available. So its objective is to provide top quality medical service, quick to access, excellent patient care. Okay. What challenges EHT might face when measuring the performance of its overall objective? Now, the overall objective is excellent patient care, quality medical service. These terms are subjective. This is the biggest challenge a company faces, which says our objective is to provide quality, excellent service. So the word excellent, the word quality is subjective. A thing which might be excellent for someone, it may not be excellent for someone else. A thing which might be quality for someone, might not be quality for someone else. Some people may think if quick service was given, that is quality. Some people may think if service was delayed, but the treatment was good, then it's good quality. Some people may think if waiting time is less, then it's quality. So quality is subjective. Excellent word is subjective. Okay. So that's the first challenge EHT is going to face. The overall object includes quality and excellent care. These two terms are subjective and not accurately measurable. A service might be excellent for someone, and the same service may not be excellent for someone else. Okay? A patient might think that service of high standards is quality, whereas other may think quick service is a sign of quality. So this is the first challenge EHT will face when measuring performance of its overall objective, whether its objective is achieved or not, whether quality is achieved, excellent care is achieved, because excellent is varying person by person, quality is varying person by person. Okay, so this is the first challenge they might face, that their overall objective is subjective. Second challenge which companies usually face, you can write this for any company when measuring performance. You can write this for any company when measuring performance. Data capturing to measure performance may be difficult in these types of companies. You know, for a commercial organization, data capturing is very easy. You have the financial statements, you can capture data from them. But these type of companies, the hospitals, clubs, Data capturing is difficult. Why? As once patients are provided any service, many of them may not prefer to disclose the feedback at the end. This is a very routine case of hospitals, that once a patient is given a service, he's admitted to hospital, all his relatives are worried. Okay. Once he gets discharged, he wants to run away from the hospital. People don't want to wait and give feedback. Okay. Like in the same manner, you go to restaurants. This is the problem in service sector. When you eat the food, waiter comes. Okay, this is the card. Please give us feedback. Many people don't prefer to fill the feedback because, okay, we have had the food, we're going. We have taken the treatment from the hospital. We want to rush from the hospital. We don't want to say, we are already very much worried because of our patient. We don't want to give the feedback. So data capturing also becomes difficult in these types of organizations, which is a challenge for EHT when measuring performance of its objective, that when you don't have the data, how can you measure your objective is achieved or not? So second point, you can write for many service organizations. Okay. And the first one, it's specifically where the objective includes quality and excellent service, because that is not easily measurable. Okay. So these are the two challenges EHT might face when measuring performance of its overall objective. This was the overall objective. It includes quality, excellence, which are subjective. And second, since this is a hospital, many people don't prefer to give feedback at the end. So data capturing may be difficult. Okay. Hope this question number one is clear to you. You can copy this so that we can move towards the next question of this March-June 2025 exam. Sorry. Okay, let's move to question number two of March-June 2025 attempt, Quality Tyre. The following scenario relates to two requirements. Quality Tyre is a company based in Castellan, manufactures and sells two types of tire for motor vehicles, basic and sport. It sells these tires to commercial customers such as garages and car repair shops. Company has been using activity-based costing throughout 2000 and is keen to take one step further and begin using activity-based budgeting as well. Okay, so what's the information? Quality Tire Company is based in Castellan. It manufactures two types of tire, basic, sport. It sells these tires to commercial customers, garages, and repair shops. Two types of tires are there, basic and sport. Company has been using activity-based costing, is now keen to use activity-based budgeting. Details of some of last year's cost driver rates were. These are last year cost driver rates. Cost per material order, $80. Cost per store acquisition, $14. Cost per machine setup, $120. Cost per quality control inspection, $260. Cost per sales order, $46. Cost per customer delivery, $210. These are details of last year's cost driver rates. You know, there are 4 steps of ABC: pools, drivers, rates, charging. So these are rates given. The third step is giving cost per material order, store acquisition, cost per setup, cost per inspection, cost per sales order, cost per delivery. With the exception of customer delivery cost, with the exception of this, customer delivery costs, all costs are expected to increase by inflation of 5% in the year ending 31st December 2001. Customer delivery costs, however, are semi-variable, and the variable element relates to fuel, which is expected to increase by 10%, while fixed element is expected to increase by 5%. Information for 2 different activity levels for total number of tires is shown. Now, all costs are expected to increase in line by inflation of 5% in 2001. Delivery costs, these are semi-variable. Variable elements relates to fuel, which will increase by 10%. Fixed element is increasing by 5%. Information for 2 levels of activity are: number of deliveries are 1,300 and 800. Delivery costs are 301,000 and 260,000. What is this? Information for 2 difference of level of activity for total number of tires is shown below. So 2 different activity levels are: number of customer deliveries are 1,300 and 800. There are 2 different activity levels, and delivery costs are 301, 266. Now, why is this? Because it stated that with the exception of delivery cost, all costs will increase by 5%. Delivery costs are semi-variable. These delivery costs are semi-variable. Variable elements relates to fuel. It will increase by 10%. Fixed element will increase by 5%. Now, since it's semi-variable, so it gave you 2 activity levels for delivery cost, which is semi-variable, and 2 costs. Average order size is 40 tires, and Quality Tire arranges a specific delivery for each customer order. So average order size is 40 tires. So average order size is 40 tires. And tire company arranges specific delivery for each order. So for each order, there is one specific delivery. For each order, there is a specific delivery, and order size is 40 tires. Sales forecasts for 2001. Sales forecast. Basic will be sold 60,000, sports 45,000. The 2 tires sales forecast is giving opening stock on 1st January are basic 3,600, sport 2,400. Quality Tire's inventory policy for 2002 is to hold enough inventory of tires to meet next month's sales demand. Forecast annual sales for 2001 are expected to be same in 2002 and will occur evenly over there. So the sales is given, opening stock is given, and policy for 2002 is to hold enough inventory of tires to meet next month's sales. Annual sales for 2001 will be same in 2002, and sales will occur equally throughout the year. So annual sales are this in 2001. They will remain same in 2002 and will occur evenly throughout the year. Batch sizes are 200 for basic, 450 for sport. What do you mean by batch size? Batch size is 200 for basic. That doesn't mean 200 batches. Batch size is 200 for basic means one batch has 200. And batch size is 450 for sport. That means one batch has 450. Okay. Quality control checks takes place on every 50th tire. Every time a batch is complete, machine used for manufacturing them needs to be set up again. So batch size is 200 is the batch size for basic, 450 for sport. Quality control checks takes place 50 tire. Every time a batch is complete, machine used needs to be set up again. Okay. Every time a batch is complete, batch is 200. So whenever 200 is complete, machine needs to be set up. And batch size is 450. Every time it's 450, machine needs to be set up again. In 2000, the number of orders and store acquisition were, this is in 2000. Remember, don't mix up, some data is 2001, some is 2000. So in 2000, number of material orders and number of stores acquisitions are given. Quality Tire Company introduced a new ordering system several weeks ago, and while the exact effect is not known, company estimates there is a 50% probability that it will reduce number of orders by 30%, 50% probability it will reduce by 20%. Store acquisition numbers are not expected to change. So requisitions will not change. This is 2000 data. So requisitions won't change. But it introduced a new ordering system. So there is a 50% probability that orders will be reduced by 30%. And 50% probability that orders will reduce by 20%. Okay. There is too much data on this. The question number 1 was very easy. There is too much data, so I need to take care of it. Okay. I think so that to explain it in a better manner, I must read this question again. Following scenario relates to 2 requirements. Quality Tires is based in Kassel and manufactures 2 types of tires, basic, sport. It sells these tires to commercial customers such as garages, repair shops. Company has been using ABC and now wants to implement ABB, activity-based budget. It's the same thing as ABC, right? Details are of last year's cost driver rates are. Last year, cost driver rates for cost per material order was 80, cost per store acquisition was 14, cost per machine setup 120, cost per quality control inspection 260, cost per sales order 46, cost per customer delivery. These were the costs of driver rates given. So pool driver rates, third step is given, just four-step charging is required. With the exception of customer delivery cost, all costs are expected to increase by inflation of 5% in the year ending 31st December 2001. Delivery costs are semi-variable. Variable elements relates to fuel, which will increase by 10%. Fixed element will increase by 5%. And since it's semi-variable for delivery, two activity levels and two costs are given. Order size for customers is 40 tires and specific delivery for each order. For each order is a specific delivery. Each order is of 40. Sales for basic and sport is given. And then you have opening stock of finished goods for basic and sport. Inventory policies to hold enough inventory to meet next month's demand. For next year, demand will be same as 2001, evenly throughout the year. Batch size is 200 for basic, 450 for sport. Batch size means one batch is 200 basic, 450 sport. Okay. And quality control checks take place on every 50th tire. Every time a batch is complete, machine is used to set up again. Okay. In 2000, number of material orders and store acquisitions were as follows, and store acquisition numbers will not change. However, the material orders, Quality introduced a new ordering system. Exact effect is not on 50% chance that number of orders will reduce by 30%, 50% will reduce by 20%. Okay, that's it. Using the template provided, complete the activity-based budget for overheads for quality control tire for the year ended 31st December 2001. Now you have to complete it for 31st December 2001. Remember, you have been given data for 2000. Last year cost driver rates 2000. And now you need to make an activity-based budget for 2001. Okay. Let's look at the template. You need to make activity-based budget for overheads for quality tire. So the template is what will be the ordering cost, stores acquisition cost, machine setup cost, quality inspection cost, order cost, delivery cost. Okay. These are the templates that you need to make a activity-based budget for material ordering cost, store acquisition cost, machine setup cost, quality inspection cost, sales order cost, delivery cost, and you need to make it for basic as well as sport. Okay, let's start. Okay, let's start with the template. Overheads budget as per activity based for basic and sport. Material ordering cost is required, store acquisition cost is required, machine setup cost is required, inspection cost is required, inspection cost, sales order cost is required, delivery cost is required. And the good thing is that you know that in activity-based budgeting or activity-based costing, there are four steps. Pools, drivers, rates, charging. You have the pools, you have the drivers not available, but the rates for the pool are given. All these cost driver rates are given. Material ordering costs, 80 per material order. See, store acquisition cost, 14 per store acquisition. Machine setup cost, 120 per machine setup. Quality inspection cost, 260 per quality inspection. Sales order cost, 46 per sales order. Delivery cost, 210 per delivery. So using the template provided, I have to complete the activity-based budgets for overheads. So this is a template which says material ordering cost, storage acquisition cost, machine setup cost, quality inspection cost, sales order cost, delivery cost. You know, in activity-based costing or budgeting, there are four steps: pools, drivers, rates, charging. So for all material ordering cost, storage acquisition cost, machine setup cost, quality inspection cost, sales order cost, delivery cost, you have the rates given. Pool driver rates are given. You just have to charge. So let's just start charging. Some things might be easy. Some things might be difficult. So let's start and try to capture majority things. Now, firstly, I have to record the material ordering cost, and I will go for working one for this for material ordering cost. This is for the Basic, sport. Okay. Now, material ordering costs. So for activity-based budget or activity-based costing, it's simply pools, drivers, rates, and charging. Okay. For activity-based budgeting or activity-based costing, it's just pool, driver, rate, and charging. Okay. Let's start. You don't have the pools, you don't have the drivers, you have the rates. What is the rate of material ordering cost? It's $80 per order. Rate per material order, $80. But that's for last year. All costs were increased by 5%. So rate per material order is 80 into 1.05, right? Since you are given rate per material order, obviously material ordering cost means pools, drivers, rates, charging. So there is no pool, no driver. Rate is given material ordering cost per material order. It will increase by 5%. So rate per material order for this year is 84. If it's rate per material order, you simply need to multiply by material orders. How many material orders are there? So last year it was 1800, 1460. Last year it was 1800, 1460. What is this year? I will just multiply and get the material ordering cost. Okay, last year it was 1800 and 1460. Now this year, whatever it is, I will just multiply the rate per material order by the material order. That's it. Quality Tyre introduced a new material ordering system several weeks ago. Exact effect is not known. Company estimates there is a 50% probability that number of orders will reduce by 30% and 50% probability that will reduce by 20%. So as far as material orders are concerned, 50% probability that material orders will fall by 30%. That means there's a 50% probability that material orders will fall by 30%. So 1800 less 30%. 50% probability are going to be 1800. And there's a 50% probability that sports orders will fall by 30%. So 1460, 30%. Okay. And there is a 50% probability that it will reduce number of orders by 20%. So 50% probability that orders will reduce by 30%. That means become 1799, 17 and 1459.7. And 50% probability that they will reduce by 20%. That means number of orders are 1800. They may reduce by 20% as well. 50% probability. And there is a 50% probability they will reduce by 20%. So 1460, 20%. 30% less means 70%, and 30% less means 70%, making it directly. Okay. So what I've done is that this is a problem in the new system introduced by ACCA. This error defined, I don't know what's the issue. Okay, so you have to manage with that. Now I have to record the material ordering cost. The problem is that material ordering cost is given 80 per material order, increased by 5%. So it's 84 per order. Now multiply by material orders. Had it been the easy number of orders, 1800, 1460, multiply by it, that's it. But this is 2000. You're being asked for 2001. So what are the orders in 2001? 50% probability that orders will reduce by 30%. That means this 1800 and 1460 will reduce by 30%, become 12601022. And there is a 50% probability that they will reduce number of orders by 20%. That means they will be reduced by 20%. This 1800 will be reduced by 20%, become 1440, and this 1460 by 20%, 1168. Now, when there is a 50% probability that basic order will be 1260 and 50% probability to be 1440, the best thing is to find EV here. Okay. When you have 50% probability, 0.5, that orders will be 1260, and then there is a 50% probability that it's going to be 1440. So best thing is to find EV. EV of material orders is 1350. And similarly, when you have a 50% probability that the number of orders of sport will be 1022, and there is a 50% probability that the number of orders for sport is going to be 1168, better to find EV. EV number of orders is 1095. That's it. The rate per material order for basic is 84 for this year. And what are the number of orders? 1350. Okay, got it. And for sport, the rate per order is 84. How many orders are there for sport? 1095 EV. That's it. Okay. And for the total, it's just the sum of B4, C4. Okay, that's it. I've got the material ordering cost. I've got the material ordering cost, and material ordering costs was generated through EV. Let me just repeat it again. I have got all the data, and after all the data, it says using the template provided, complete the activity-based budget for quality tyre for overhead. So activity-based budget template is material ordering cost, stores acquisition cost, machine setup cost, quality inspection cost, sales order cost, delivery cost, total overheads. Okay. I told you that when you have to fill this template using activity-based budget or activity-based costing, 4 steps: pool, driver, rate, charging. So rate for material ordering cost is given. Cost per material order is 80, increasing by 5%, 84. What are the number of orders? Number of orders were 1800. 50% charge, they're going to be 30% reduced, 1260. And 50% charge, they're going to reduce by 20%, 1440. So 1800 will reduce by 70% and 20%. Sorry, 30% and 20%. So 50% probability that orders will be 1260, lesser than 30%, and 50% probability they will be 1440, lesser than 20%. So when 50% probability of 1260 is there, 50% probability of 1440 is there. So I computed EV. The EV number of orders for sports is 1350. And the same thing happened with sports. 50% probability that's going to be 20% less than 1460, 1022, and 50% probability is going to be 30% less, 1022 and 1168. So when 50% probability of 1022, 50% of 1168, find EV 1095. Okay, so 84 is the rate per material order. The number of orders are 1350, 1095. You got the material ordering cost. Will everything be that difficult? I don't know. Maybe some things will be very easy. Like the next thing you have to fill in this overheads budget is stores requisition cost. Please pay attention, stores requisition cost. Now, please pay attention, then I will give you copying time. Stores acquisition cost. How to find the stores acquisition cost? Store acquisition cost is pool driver rate. What is the rate of stores acquisition cost? It's 14. Let's have working 2 here. Stores acquisition cost. Okay. For basic and sport. So, pool driver rate. What is the rate of store acquisition? It's 14 and has to increase by 5%. See, this is last year. Everything will increase by 5% except delivery cost. You have to get the last one. Everything is increasing by 5%. 14.7. since this is the rate per store acquisition, it needs to be multiplied with store acquisitions. What are the store acquisitions? 6,400, 4,240. This is for last year, 2000. Store acquisitions. Store acquisition numbers are not expected to change. So easy. Store acquisition numbers will not change. So what will be them? 6,400, 4,240. That's it. The rate per store acquisition is 14.7. The number of requisitions for basic are 6,400. And this is 14.7. Number of store acquisitions for stores are 4,240 for sports. Okay. 14.7 into 6,400, 14.7 into 4,240. The total will be, by adding them all, 156,408. Okay. So I think out of this activity-based budget, we have done two things. Please note them so that I can move towards the next two things. Then I will give you time to copy those, and then the last two. Okay. This is how it will work. So please copy these first two. The store's requisition cost was really easy. Okay. It's just the pool driver rate. Rate is given of store acquisition 14, increasing by 5% for next year, 14.7. And then the store's acquisition was same, 6,400, 4,240. So I multiply a bit. But honestly speaking, material ordering cost was a bit technical. Material ordering cost rate was 80, increasing by 5%, 84. How much orders were there? Material orders. So 1,800, 1,460. 50% probability they will be reduced by 30%, become 1,260. 50% probability they will reduce by 20%, become 1,440. So 50%, 1,260, 50%, 1,440. I found EV, and same I did in sports. Please copy so that I can now move towards the next issues. Okay. Okay, now let's move forward the machine setup cost and quality inspection cost. Okay, so I will be going for working three and working four for machine setup cost and quality inspection cost. Okay. Okay. So let's start working three and then working four. Working three is machine setup cost. Working three is machine setup cost, and I need it for basic and sport. Okay. So the machine setup cost. Now, if you tell me it's pool driver rate again, what is the rate of machine setup cost? Cost per machine setup, right? Machine setup. It's 120 and increasing by 5%, except this, everything is increasing by 5%. So 120, steric 1.05, it's going to be 126. Number of setups. Its rate per setup is given. You have studied this in class. You need to multiply with number of setups. Now, what are the number of setups? Okay. Batch sizes are 200 for basic, 450 for sports. So batch size is 200 for basic. One batch has 200 units. One batch has 450 units for sports. Quality control checks take place for 50 tire. Every 50 tire, there's a quality control check. And once a batch is complete, once you complete the batch of 200 units, you need to set up the machine. Okay. Now, obviously, there is a problem that if batch size is given, I can easily find number of batches. If batch size is given, I can easily find number of batches. Okay. One batch has 200 units, one batch has 450 units. I can easily find the number of batches. But in this question, what is the production of the company that is not given? Sales is given, opening stock is given, and company wants to keep closing stock. So production is not given. So what I will do is that for basic and sport, we can find the production. We can find the production. You will just realize later why production is required. Okay, you are given sales, you need to find production. You will realize later why it's required. So for production, it's a general formula in every cost accounting: closing stock of finished good, add sales demand, less opening stock of finished goods. Okay, you get the production. This is the general formula of production: closing stock of finished goods as sales demand less opening stock. So what is the sales for 2001? 60,000, 45,000. Okay. Where's the opening stock? 3,600, 2,400. Okay. And what is the closing stock? What is the closing stock? Quality's inventory for closing stock of quality's inventory for 2002 stored enough inventory of tires to meet next month's sales demand. Now, how much closing stock company wants to keep? Enough to meet next month's sales demand. Forecast annual sales for 2001 are expected to be same in 2002, will occur evenly throughout the year. Now, the sales for 2002 will also be the same, 60,000, occurring evenly over the year. That means 60,000 occurring evenly throughout the year, equally throughout the year. So that means monthly would be 60,000 divided by 12. Monthly sale will be 5,000. Okay. The sale for 2002 will be same 60,000 occurring evenly throughout the year. That means every month 5,000. So company has sales given, company has opening stock given, but closing stock, the company wants to keep enough to meet next month's sales demand. So next month's sales demand for basic will be 5,000 because every month sale is 5,000 in 2002. In 2001, the sales is this 6045. In 2001, opening stock is this 3600, 2400. Closing stock. In 2001, the company will keep how much closing stock? Enough at the end of 2001 to meet next month's sales demand. So next month is 2002 month. 60,000 will be the annual sales, same, occurring evenly throughout the year, equally throughout the year, 5,000 each. So enough closing stock to meet next month's sales demand. Next month's sales demand is 5,000. And here, the sale will be 45,000, same in 2002 as 2001, occurring evenly throughout the year, divided by 12. 3,750 per month. So sports, we will keep enough closing stock to meet next month's sales demand. That is 3,750. Once you have the closing stock and sales demand less opening stock, you have got the production. Now, once I have the production with me, I can easily find number of batches. I need number of setups, okay? I need number of setups, but please pay attention. Once I have this, I need to find the number of batches, okay? And how will I get the number of batches, okay? They have told you production is this. What is the batch size? The batch size is 200 for basic. Each batch has 200 units and each batch has 450 units. So you can say that if company is producing 61,400 units, if company is producing 61,400 units and batch size is 200 units, each batch has 200 units. So number of batches would be 307. And if in sports company is making 46,350 units and batch size is 450, each batch is 450 units. So number of batches will be 103. Okay. Now, did you realize why did I need this production? Because without production, you cannot find the number of batches. You cannot divide the sales 60,000, 45,000 by the batch size 200, 450 to get number of batches. Okay, this is sales. You need production. So I found production, closing stock, at sales, that's opening stock. This is the production formula. Once I got the production, 61,400 units and 46,350 units. Okay, opening stock and sales was given. Closing stock was next month sales. So next month sales was same as equally 60,000, 45,000 divided by 12 equally throughout the year. So per month sales was closing stock. Once I got the production units, the batch size was 200 for basic, 450 for sports. So 61,400 units were being made and batch size was 200 units. So 61,400 over 200. Number of batches 307. 46250 was the number of units produced and 450 was the batch size. Each batch has 450 units. Number of batches would be 103. Still, this issue is not complete. Rate per machine setup is given. I'm on number 3, 120. Increased by 5%, 126. And I need to multiply the number of setups. Okay, so I'm still unable to get the number of setups. I got the number of batches. Okay. Batch size 200 for basic, 450 for sports. I got the number of batches. Quality control checks place on every 50th tire. This is interesting. Quality control checks takes place on every 50th tire. So, quality control checks takes place on every 50th tire. How many tires companies making for basic 61,400? Every 50th tire has a quality control check. Every 50th tire has a quality control check. So the number of quality control checks you can get it 1228. Understanding this? Quality control checks. Quality control checks takes place every 50th tire. So you are making 61,400 tires, right? Every 50th tire has a quality control check. So you can divide to get the number of quality control checks. Similarly, you are making 46,350 units of sports. Every 50th tire has a quality control checks. That means on 100, there are 2 quality checks. On 150, 3 quality checks. On 200, 4 quality checks. So 46350 you're making, and every 50th has a quality control check. So number of quality control checks you have got. Okay. And every time a batch is complete, machine used to manufacture them needs to be set up. Okay. So number of setups. Whenever a batch is complete, you need to set up the machine. How many batches are there? 307, 103. Now there are 307 batches, right? And every time one batch is complete, the machine needs to be set up. So in 307 batches, how many setups will be there? 307. And this has 103 batches. Sports has 103 batches. If sports has 103 batches, please pay attention. If sports has 103 batches, every time you complete a batch, machine needs to be set up again. So 103 batches you have. Every time you complete one batch, machine setup. Every time you complete one batch, machine setup. So in 103 batches, the number of setups would be 103. And you are now able to get the machine setup cost at the rate was 126 for basic. 307 setups, got the answer. And here it's 126 for sport. You have 103 number of setups, 12978, and you can total it as well. Let me just repeat it again. Let me just repeat it again. Firstly, for batch, number of batches, batch size 200 for basic, 450 for sports. One batch has 200 batches, 200 units. The batch size doesn't mean 200 batches. One batch has 200 units of basic. 450 is the batch size for sport. One batch has 450 units. Okay. Now, how many units you are making? You need to find them. Sales demand was given 60,000, 45,000. Opening stock was given. Closing stock is equal to next month's sales. So what is the next month's sales? I know the next year's sales units, same 60,000 and 45,000 spread evenly, divide by 12. 5,000 and 3750 is the per month. So next month's sales is 5,3750. You got production. Production is 61,400 units. Batch size is 200. Each batch is 200 units. Divide number of batches 307. Production is 46350 units. Batch size is 450. Each batch is 450 units. Divided 103 batches. Quality control checks takes place after every 50th batch. There are 61,400 units, and after every 50th unit, there is a quality control check. So you can divide to get the number of quality control checks. And 46,350 units are being made. After every 50th unit, there is a quality control check. You can divide to get the number of quality control checks. Okay. And number of setups. After every batch is complete, machine needs to be set up again for the next batch. So you are completing 307 batches, right? After every batch, one setup is required. So in 307 batches, 307 setups. Okay. Similarly, after every batch, machine needs to be set up. So in 103 batches, 103 setups. Okay. You got the machine setup cost. And now the quality control inspection has also become very easy. The quality control inspection has also become very easy. For basic and sport, the quality control has also become very easy. Please pay attention. Then you can copy this. What is the pool rate, pool driver rate? Quality control inspection, 260. Rate per quality control inspection, 260. Increasing by 5%, right? 273. And number of inspections. Okay. There is an inspection, quality control check after every 50th tire. So you are making 61,400 units. After every 50th unit, there is a quality control inspection. So I divided it to get the number of inspections. And here 46,350 was the production. The new platform is very irritating. So 46,350 is the number of units divided by 50. After every 50, there is a quality control check, 927. And this way, I have the number of inspections 1228 and 927. I can now easily get the quality inspection cost. 273 per inspection into 1228 for here. And 273 per inspection into 927 inspections for sports. You can add them. 588,315. So I hope this was a bit complicated, but it's easily understandable now because we have tried to explain you this in a very easy manner. Working 3 and working 4 are ready for you. If you want, you can copy. I will repeat this in the end as well. But material ordering costs and storage acquisition was comparatively easily. Honestly, storage acquisition was nothing. Cost per store acquisition into number of acquisitions. Material ordering cost a bit mind may go here and there due to probability, but 50% it will be this, 50% will be this. You get the EV and you multiply it by the cost per ordering. Machine setup, quality inspection, tricky. First, you have to find the number of batches. For that, you need how much production is there. So closing stock at sales demand less opening stock, you get the production units. Each batch has 200 units, so got the number of batches. After every batch, you have to set up machines. So 307 batches means 307 setups. 103 batches means 103 setups. You got far from here. Quality control inspection rate is given 273. Multiply by number of inspections. Every 50th unit has one inspection. So 61 400 units divided by 50, you get the number of inspections and cost per inspection into number of inspections. Okay. Now I'll move towards the last two, but first you will copy this. Okay, now I think last two things we should move towards them. Sales orders cost working 5 and delivery cost working 6. So sales order costs. So for basic and sport, pool driver rate. What is the sales ordering cost rate? 46 cost per sales order. 46 increasing by 5%. It needs to be multiplied by number of sales orders. Let's find sales orders. Now, average order size is 40 tires, and Quality Tires arranges a specific delivery for each order. Okay. Now, order size is 40 tires. Customers orders 40 tires, right? So let's pay attention. The sales are 60,000, right? The sales are 60,000. This you are selling. And order size is 50 tires, 40 tires, sorry. Each order has 40 tires. So what would be the number of orders? 1500. Okay. And there is a specific delivery for each order. So for each order, there is a specific one delivery. So number of deliveries will also be 1500, right? Similarly, how much is the sales? 45,000. And order size is 40 tires. In one order, there is 40 tires. So you are selling 45,000 and every order has 40 tires. So number of orders will be 1125, and there is a specific means one delivery for each order. So if there are 1125 orders, the deliveries will be 1125. Okay, so cost per sales order was 48.3. How much was the number of sales orders? 1500. 72450. 48.3. How much were the number of orders? 1125. You get the total here. Let me just repeat. Sales order cost, the cost per sales orders was 48.3, 48.3. Number of sales orders was 1500 and 1125. How? 60,000 sold. And there is order size of 40. One customer has an order size of 40 tires. There are 40 tires in an order. So 60,000 you're selling, and every order has 40 tires. So 1500 orders you will receive. 45,000, 40 orders, 1125 orders. And there's a specific delivery for each order. So every order there is a delivery, 1500 deliveries, 1125 deliveries. Okay. You can copy this, then I will move towards the last issue, that is the delivery cost. Okay, last issue relates to delivery costs. So let's just wrap it up so that this thing is over. Okay, now as far as the delivery cost is concerned, so cost per customer delivery is 210. It would have been easy that it's increasing by 5% and I just multiplied with the number of deliveries and that's it. But with the exception of customer delivery costs, all costs are expected to increase by inflation. Delivery costs are semi-variable. Variable elements is increasing by 10%. Fixed element will increase by 5%. Information on two different activity levels are. So the information on two different activity levels and two costs are given. So I would first apply high-low method here, I think, because two costs and two deliveries are mentioned. So when we apply the high-low method here, it's a variable cost per delivery and fixed cost. Okay. So variable cost per delivery is 301,600 minus 266,000 divided by 500, 71.2. And fixed cost is sorry, it's 301,000 less 266,000 over 500. So variable cost per delivery. And you know, fixed cost is the variable per unit multiplied by any highest or lowest less the 266,000. 210,000. Okay. Now I've got the variable and fixed elements. So what about the next year? Because this data are mainly related to the two activity levels. Next year, fixed cost will increase by 5%. So 210,000 to 1.05 to 2,500. And this will increase by 10%, sorry, fuel cost. So 77 into 1.1. Okay. These are the variable costs per delivery and fixed costs for the next year, 77 and 2,500. I just need to multiply it with deliveries, but for delivery costs, it's semi-variable. Okay. So how will it go? Please pay attention. How will it go? Please pay attention. Okay. Variable will be separate. Fixed cost will be separate. Okay. Now variable is basically for next year, 77 per delivery. How many deliveries are there for basic? 150,000, right? 1,500, sorry. This is the variable element. And for here, 77 per delivery. How many deliveries? 1125. The variable element. What about the fixed element? Fixed element is 2,2,500, but it's for both deliveries. 1,500 and 1125. Okay. Fixed element is for both deliveries. 220,500 is for 1,500 and 1125 in total deliveries. Okay. So what you can do is you can spread this 220,500 fixed cost into both of them. Like you can do like this. It's for basic. Sport, 2,500 fixed cost is for all deliveries, 2,625. So for just the basic, it's 1,500. And for the sports, 220,500 is for all deliveries, total 2,625 deliveries into just 1,125 deliveries, 94,500. So this will be variable into deliveries plus fixed element of 126,000 and 86625 plus the fixed element of 94,500. And for total, it will be the sum of B4 to B9. 1551176. This you have prepared your activity-based budget for all items. And I've fulfilled this template as well. Okay. This indeed, I would not try to give you unnecessary confidence. This was a technical question. I understand that. But my strategy when I was a student to handle technical questions was that try to gain maximum marks from you. Like I think its storage acquisition cost was very easy. Cost per store acquisition increased by 5% into number of acquisitions, very easy. Machine setup and quality inspection costs were also not difficult, that you found the production units and divided by to get the batch number of batches, then same batches, same number of setups, and quality inspection every 50th batch, so number of quality inspections. Sales ordering cost was also easy. You get the number of orders. Delivery cost and material ordering costs were a bit technical. This first one and the last one were technical. Even if someone got these two wrong, still the marking scheme says 9 marks are available, excluding these two. 8 marks are available, sorry. So I think in technical questions, maximum marks need to be captured, but still copy this. I will explain you once again, revise it so that the things are better. Okay, so the activity-based budget for overhead was required. The template was given. Material ordering cost was cost per material order 80, increased by 5%, and number of material orders were given. But 50% probability they will be less than 30% and 50% less than 20%. I computed an EV multiplied by the cost per material order. So that's it. Cost per store acquisition was 14, increased by 5%, and number of acquisitions 6,400, 4240. Machine setup costs, very good working. That machine setup costs, we had sales units. We first found production units, closing stock at sales demand less opening stock. Once you have the production units, batch size was 200, 450. We divided to get number of batches. Same number of batches, same number of setups. So I multiplied them by the number of setups, which was the same, 307 and 103. The setup cost, 120. Why? Because the question was written that after every batch, we need to set up machines. So 307 batches, 307 setups. Okay. Then there was inspection cost. So the cost per inspection was increasing by 5%. I increase it 270, 270 number of inspections. So every 50th unit has one inspection. So 61, 400 units divided by 50, 1,228, 927 inspections. Okay. Ordering costs, it's 46 into increased by 5%, 48.3 number of orders. So each customer has an order size of 40. So 60,000 units, 40 order size will be 1,500 orders, 1,125 orders, and one delivery for order. So deliveries are also there. Delivery costs were the cost per delivery into number of deliveries, 1,500 and 1,125. But it had a high-low element. So I did high-low method 70 to 10, increased by 5%. Okay. Even if this has 4 marks, if you just do high-low method, at least you get 1 mark. Okay, you get number of deliveries, 1 mark. Still 2 marks, even though your answer is incorrect. So make sure to work smartly. Okay, like everyone knows that for delivery costs, I have to apply high-low method. Okay, so 70 to 10. I know I have to increase by 5% and 10%. So this is worth 1.5 mark. Okay, so variable cost was delivery, 77 into number of deliveries, but fixed cost I spread on both. Okay, so I got the activity-based budget. Okay, what's the next part of this question? 3 difficulties which could be faced by an organization when implementing activity-based budgeting. 3 drawbacks of activity-based budgets. You can directly read it from the study text, study hub. It's mentioned. I will just write it again. Remember when I taught you this topic, I told you that the advantages and disadvantages of activity-based budgets are the same as activity-based costing. I told you incremental budgets, zero-based budgets, activity-based rolling budgets. I told you advantages and disadvantages of incremental, advantages and advantages of zero-based. But in activity-based budgeting, I said advantages, advantages are same as activity-based costing. Disadvantage number 1 of activity-based costing. ABB may be more time-consuming, as now drivers have to be identified for each activity, whereas in traditional system, only one item was required, that is machine hours or labor hours. Okay. Staff training may be required to make them compatible with new ABC system. Staff are not trained to use ABB. You need to train them, leading to more costs. Existing information systems may need to be updated to make them compatible with new ABB system. Existing information systems were trained to give information about machine hours, labor hours. Now we need information about activities. So existing systems are trained to just capture machine hours, labor hours. Now we need about activities. They need to be updated. So overall, the activity-based costing advantages are of ABB. That's it. You can copy this, or this past paper of March, June 2025 PM is now complete. Thank you.